The biggest thing I would say is make sure if you're thinking about buying a house, whether it's next month, whether it's 6 months down the road, once you talk to Dee and, hey, this is my girl, she's going to be your girl. She's going to be your girl. Then make sure you reach out to a mortgage person, because there's nothing worse than finding your dream home and then realizing, you can't qualify for that.
So today we actually get to meet Kim Venable. She is a highly experienced mortgage consultant with Fairway of the Southeast. Kim brings a personal touch to each and every one of her clients. She's got over 3 decades of experience in the mortgage industry. Kim's built a reputation for her dedication, expertise, and commitment to helping her families achieve their homeownership dreams. She's licensed not only in North and South Carolina, but also in Florida. That makes her a valuable asset for home buyers seeking the best mortgage financing programs for their dream homes. Welcome, Kim, and make yourself at home.
Hello, Dee. Thank you so much for having me. I so appreciate you having me in. I have worked with you for so many years, and you are amazing. I tell you, there's something about working with people who are seasoned, and you are absolutely one of my very favorite people. So thank you, and just thank you for honoring me and having me here.
Thank you so much. We have worked together over many years. And one of the things that we talk about all the time is the fact that although we do this every day, nobody else does. And so it amazes us. All of our kids are grown, but we know.
Don't tell anybody because we're young. We're young.
We know that the public school system doesn't teach people about financial literacy, about how to buy a home, how to do your own taxes. Nobody teaches any of this.
Right.
And so that was one of the things that we talked about recently, and I wanted to bring you on because it's some of the things that I think that everybody needs to know. And that's why I did this podcast, was because nobody's teaching this. Mm-hmm. So in your opinion, what's the number one thing that most buyers don't think about when they buy a home?
I would say number one is, have you looked at your budget? Do you know what you have to pay each month as far as auto, credit card? Have you thought about how much money you have left over? And when we look at money, we look at your income, and where you might make $60,000 per year, by the time you bring that money in, the government gets a chunk of that. And so we want to make sure that with the money that you're bringing in each month, compared to what you're going to spend, not only on your auto, not only on your credit cards, but also on this new mortgage that you're thinking about taking on, we want to make sure that your ratios are in line, that you're not getting in over your heads. And so I would say, first of all, let's start with a budget.
All right. Because most people, they think, okay, my rent's $2,000 a month. My car note is $900 a month. I'm bringing home, $1,600 a week. And you're thinking, oh, I got plenty of money. Mm-hmm. And you're sitting there going, okay, that's about $6,000 a month, $6,400 a month. And $4,500 disappeared. You got $2,900 just right there off of just your house and your car. And that doesn't include feeding yourself, car insurance, like anything else, or your lights, or
or going to dinner once in a while. Yeah. And so if you're bringing in, let's just say $6,400, let's just use that number. Let's just use $6,400 a month as far as income. As soon as I hear that number, the first thing I'm going to do is I'm going to divide that by 2. Okay.
Yeah.
And the reason is because, not that I recommend going this high, but we're going to look at your debt to income ratio. Mm-hmm. And most loan programs require you to stay 45% and below. There are some that will allow a little bit higher, although if you're a first-time home buyer especially, that's not something that I recommend. But what you need to think about is if you bring in $6,400, Let's divide that in half because we don't want you to be over budget, right?
Correct.
That means that each month with your car, your credit cards, and your new mortgage payment, we don't want that to be over about $3,000 per month.
Mm-hmm.
And when you think about, hey, what's a new house cost? You do have your principal and interest payment, but you also have taxes, homeowners insurance,
Mm-hmm.
possibly mortgage insurance. Maybe you're buying into a community where you have homeowners association dues. So we don't want to just look at it and say, hey, your monthly payment is going to only be $1,500. That $1,500 may or may not include the taxes, the homeowner's insurance, the mortgage insurance, or these things like that that are important in your budget, right?
And that's one of the things is that do people know that there are parts to a mortgage payment? Most everybody who started off renting, okay, I pay my rent.
Mm-hmm.
Rent is rent.
Yeah.
There's no extra parts of rent. Now, we do have a son who's in the rental industry.
Mm-hmm.
And so now there are different parts of rent. So we are now starting to see the rental community is now starting to do these parts as well. So they're starting to see not only do you have your rent, but you also have your garbage collection. You also have your filter change outs. You also, so you now start to have all of these parts, but most people don't know there are up to 5 parts in a mortgage.
Yes.
And that's one of the things I talk about. It's okay, you're borrowing the money. That's the principal. The bank's got to always make their chunk.
Yes.
So that's the interest. So that's how the bank makes money off of you. Uncle Sam's always got his hands in your pocket. So that's your taxes. And then your insurance. So if the house burns down, you got to be able to rebuild it. So those are at minimum the other 4 parts. Most everybody thinks I have to bring 20% down. And who's got $120,000 or $100,000? Because the average house right now is between $400,000 and $500,000.
Right.
So who has $80,000 to $100,000 to bring 20% in? Most people, if they don't know, you don't have to have 20%. But then that does add another piece to your mortgage payment, which is that mortgage premium insurance or primary mortgage insurance, which is basically the bank who is making the money off you turns around and sells your note to somebody else, sells the mortgage to somebody else, so they can lend the money to the next person. That if they do that and you only borrow 95 or 97% of what the house is worth, they then have this mortgage insurance premium that you have to pay that tells whoever is going to purchase it that if you don't make your payments, they'll get their money, at least 80% of it back.
Right.
So it's not so much. So there are up to 5 pieces to a mortgage payment.
Absolutely. You easily have your principal and interest payment. And usually that's what, when a home buyer, and I want to say this out loud because you'll understand what I'm saying, a lot of home buyers now start online with their search.
Yep.
There's so much information out there these days.
Yep.
Quote, available. However, that's when you go to the doctor and you have your lab results run and they call you and they give you this script that says blah, 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 blah. You have to talk with somebody who understands and can explain what in the world does that mean? When they send me my blood results, I can't understand a thing about it. So when you find things online and you try to find either a realtor online, a lender online, whoever online, and it's almost trying to find, okay, my mortgage payment online, what is mostly posted is just your principal and interest payment.
Yeah.
So for example, you're buying a $700,000 house, you're putting 10% down, your principal and interest payment alone is going to be $3,700.
Yep.
To that, you have to add real estate taxes. Depending on which county you're in, That may, again, depend on which county, they're all different, but that can vary, right? We want to make sure that we look up, hey, what did the seller pay last year, most recent year, for taxes? Because we want to add that in. We want to look at what is an average for homeowners insurance per month, per year. And if you're not putting 20% down, which honestly, most people don't, and I think that's still a myth out there, is that you have to put 20% down. There's mortgage insurance that is added on. And so what we do is we look and we say, okay, this is your total mortgage payment. Does this fit within your budget? And lots of times, honestly, when clients call me, whether they're first time home buyers, move up buyers, we may decide, hey, putting 20% down is not the best option. How about you put down 5% or 10% and you invest the other 10%, make money on that?
Yep.
Because if you have great credit scores, your mortgage insurance is not expensive. So save that money.
And a lot of people don't know that if you make one extra payment, and we're not even talking about the other parts, just the principal and interest.
Yes, maybe.
And you make it directly towards your principal, you can shorten a 30-year mortgage to 24 or 26 years.
Absolutely. I think it's the education on these things that is so important. And I think that's where, I don't know, maybe we're just moms and we're old. I don't know. I don't know. And I'm okay with that. I feel like the mortgage granny sometimes. But if we can talk to people and educate them on, hey, save your 10%, put it in the bank, earn your interest on that, put 10% down. If your monthly mortgage insurance is only going to be $56 a month, save your other 10%. And another good thing, a lot of lenders do sell their loans. We're not selling our loans. We are keeping it. If you go with us, Fairway, we keep your servicing. We don't sell it. We went through that so many times, and we found that it was difficult for the clients. So just know that servicing can be a big deal. So hopefully
it really is.
Hopefully we get it and we keep it, and you understand exactly what you're getting. So,
what pitfalls do you want buyers to realize that are out there when they're in the process of buying a home?
Ooh,
and I'm not talking about the real estate portion. I'm talking about the mortgage portion.
Oh, okay. So the biggest thing I would say is make sure, if you're thinking about buying a house, whether it's next month, whether it's 6 months down the road, once you talk to Dee and, hey, this is my girl, she's going to be your girl. She's going to be your girl. Then make sure you reach out to a mortgage person, because there's nothing worse than finding your dream home and then realizing, you can't qualify for that. So I would say the most important thing is reach out to a lender that's trustworthy, local, and can pre-approve you. And when I say pre-approve, I'm talking about, let's look at your credit. We can do soft credit checks, but let's look at your credit. Let's look at your income documents. I would never want a client to go out and put in an offer on a home unless I had reviewed their income documents. Yeah. Just like an underwriter is going to do. Do that first. Definitely do that first. Once you even say, hey, I'm even possibly thinking about looking for a home, and you go on the internet, you're going to get crazy emails, texts, lots and lots of information. It is going to completely overwhelm you. It's going to completely overwhelm you. First thing, you're not going to know what to do. You're going to see a house and you're going to say, oh my goodness, here you go. Here's so-and-so to call. You don't have any idea what realtor to call, because 9 times out of 10, that's representing the whoever is listing the house. So just keep that in mind. But get a really good lender that can explain to you what you qualify for, what that payment looks like. Interest rates are talked about so many times.
Yeah.
about, oh gosh, I'm going to go with the lender who has the lowest interest rate. And the truth of the matter is, you can have any interest rate as a buyer that you want. And when I tell people that, they're shocked.
Yeah.
They say, what do you mean I can have any interest rate? The way that the market works, and it changes every day, every morning,
Yep.
sometimes 2 or 3 times throughout the day.
Yep.
But you can have any rate you want. What we want for you is that you're getting a great rate. But if you want to pay for a lower interest rate, you can do that. But there are costs. If you see something online and it says, hey, interest rates are averaging 6%, but you hear something or see something online and it says, oh, this lender has 5.25. We can do that all day, but it's probably going to cost you between 15 and 20,000. So just know that, get approved quickly, know what your budget is, know what your mortgage payment is, know that all of those 4 or 5 factors are included in your mortgage payment, and know that you can have any interest rate you want. Don't get stuck on the interest rate. I think that's the biggest thing.
So one of the things that I want, you are one of, there are not many people that are on my list. You are one. Because we've been doing this for a very long time, Kim, and people get into real estate like it's nobody's business, especially when it's busy. All you have to do is be an order taker. People jump into the real estate, whether they become loan officers or they become real estate agents. People jump in because it's easy. I can become Donald Trump. I just get people, money's just going to come. And it's great, but we work really hard to make our industry better. But some of the things that people don't think about, you're building a team. And you need to make sure that you are surrounding yourself with people who know that industry. So you want the smartest person you can find for your lending process. You want the smartest realtor that you can find about the home buying process. You want the best home insurance person that you can find. But you also want these 3 people to be able to talk to one another and to be able to talk to you. And you are the boss. And if somebody says you can't do that, you need to find out why. Because you should be able to say, educate me on why the answer is no. No is a complete sentence, but you should be able to tell me why is no the answer.
I so agree with that. And I think you just nailed it. And I've said this for years. For some reason, and I don't know what this is about, but for some reason, clients, home buyers, will want to talk to me about the kind of house they want and what they thought about what you showed them over the weekend, and that they want this bedroom, they don't like that bedroom. And I will be honest with you, I do not know how to sell a house. I could not sell a house. I could not do your job. Don't want to do your job. I love you, but I don't want to do your job. Please, Lord.
I don't want to do your girl. I don't want to do yours either.
And what's so funny to me is that they'll talk to the realtor and they'll say, oh, but so-and-so has a better rate, or so-and-so whatever about the lending part. And you are probably, if I know you, you're probably like, I don't have a clue. I'm just trying to sell you a house. And so finding a team that can support you, realtor, lender, insurance, whoever is on your team, it takes a team to get a client from beginning to end. And it takes experience. And that's one of the things that I'm seeing these days. Anybody can say, sure, I can sell you a house. Anybody can say, sure, I can get you a loan. But do you understand, and are you being educated through the process? And
I don't want us to get back to a 2005, 6, 7 mentality where people were like, oh, okay, I'll just get, and they didn't realize it, I'll get 4 mortgages. I'll get a 70%, and then I'll get 3 10% mortgages so I can get into this house. Or I'll get into one. Thankfully, you can't do subprime anymore. And, oh, I'll get an ARM that's going to go up as much as 7% over the life of the loan. if interest rates are high. And then you don't think about it. You're just plugging along making your payment, and then interest rates are 10% and you're stuck. I can't afford this house
Yeah,
anymore.
I can't do that. I can't personally put somebody in something like that. That's just not okay.
No.
And we have the conversation. And there may be people out there that want to put you in something like that, and that's just not us.
Yeah. The other thing people don't think about is when you're in this process, your team needs to be a team together,
Mhm.
meaning that of course, you'll have extremes on both sides. But I've had one client that her lender told her, don't buy anything other than groceries and gas. Don't you dare buy anything. This girl went
She probably,
6 weeks without a haircut.
she was probably scared to death.
She was actually scared. She didn't get a haircut. I'm like, how do you not get a haircut? She goes, my lender told me not to buy anything. And
That
then
is so
bless Ted, bless his little heart. But and Ted in his former life sold jewelry. And so he'd have these little creatures coming together to buy the ring, and they're so excited. And they're like, but we're buying a house. And he goes, where are you in the process? And he's, we're getting ready to close next week. Oh, that's okay. They already pulled your credit. You don't have to worry about it. Buy the ring. And I'm like, no. Or I'm going to buy, okay, we got to get furniture for this room and we got to get furniture for that room. No, you furnish the house after
That's
you
right.
buy the house.
That's right. We try to tell people, try to keep your credit the same
Yeah.
from the time that you talk to a lender until the time you close. You can go to the grocery store. You can do all that. What we don't want you to do is to open up a brand new credit card at Lowe's so that you can build whatever. And we don't want you to open up a new Best Buy card because you want the special that, of course, is only offered like right then. I tell my clients, listen, everything that you see, Home Depot is going to have a special, Bed Bath and Beyond is going to have something.
Yep.
And all of them are going to offer it, and it's going to be limited time only. You can only get this humongous deal and this big refrigerator package 3 weeks before you're closing. And I say, no, don't open any new credit cards. Don't close any of your accounts. But God bless you, go get a haircut.
But I can tell you this, if you buy appliances, it always comes with every holiday. Memorial Day,
Yes.
President's Day,
Yes.
Flag Day,
Yes.
every holiday
It does.
is an appliance sale. Don't worry, it'll come again.
It'll come
I
again.
promise.
It'll come again. And they'll have that same deal. You just go and give them your name, put your name in, and say, remember me, I'm coming back as soon as I close my house. And they'll have that deal for you, I promise.
Oh, yeah. Oh, yeah.
That's something. But yeah, I will say any kind of money that's coming into your bank account as a home buyer that is not your regular payroll, we're going to ask about. Watch your deposits. If grandma's going to give you a gift, that's amazing. But we just want to make sure that we have a letter that says, hey, this came from grandma.
Yep.
Watch what you don't change jobs.
Yep.
If you are, call your lender, make sure that you've cleared it. You just want to make sure if you're changing jobs at a similar line of work and that you're getting paid base salary. Those are things to watch out for. Don't change jobs. Keep your credit pretty much the same. But have a lender and a mortgage person that you can be real with. I think that is so important because like you said, we do it a lot, but people don't buy houses every day.
Correct.
And so when things come up where it might be a humongous deal, and they may think, oh my gosh, this is going to totally derail this process. It doesn't have to. So just be open and ask the questions and talk with your lender, your realtor, and see how it affects things. The more we know, the easier it is to help.
Of course. And you want somebody that you can talk to and go, hey, I need to make sure that this is all right. And that's okay.
Yeah.
Like I said, no is an okay answer, but you need to know why the no is an okay.
And if no right now, maybe how do we overcome that so we can get it done? Kind of thing.
Now, you said that you could we talked about the parts of a mortgage, and then you said everybody's looking for the best interest rate because nobody likes the simple fact that right now interest rates are below average. The average, since they've been paying attention to mortgage rates, is 6.4%.
Mm-hmm.
And right now we're under that. So it's less than what it is. But I had one of my past clients goes, when is it going to be 3% again?
Never.
And I'm like, baby, you have to remember the last time prior to 2008, when it was 3%, was 1944.
Yes.
Maybe 64 years. So we're looking at 2020 or 2080. I'll be dead.
Yeah, me too.
I'll be dead.
Me too.
Yeah. Because I don't want to be here when I'm 110.
Me either, girl.
I hate to tell you.
I'm gonna be up somewhere very peaceful.
If they can have any interest rate, how is that possible?
Let's back up to what happened with the whole you have 3%. Okay.
Okay.
So the big deal with that was we were in a pandemic, and that's why interest rates were 3 and 4%. We're not ever going to see that again. Never, ever.
And remember, interest rates fell right after 2008 because nobody was buying anything. And so the banks were like, please, God, go spend money. But nobody had a job. Or if they had a job, they were scared to death they were going to lose their job.
Right.
People were losing their homes left and right. So it took a catastrophe to get to that.
Yes. And we don't want that again.
To see that. Yeah, we don't want to see that.
No, I love you, but I would rather you have an interest rate that's normal of 6.5%, even 7%, than us go through a catastrophe.
Yeah.
And honestly, if you look at history, and we can show a chart, but honestly, if you look at history, interest rates generally are 6, 7, 8%. So for you to have anything in the low sixes, we should be shouting from the rooftops.
Yeah.
Honestly, we follow the 10-year Treasury, and the 10-year Treasury 2 weeks ago, and this is something that's of interest as well, but the 10-year Treasury is what lenders follow as far as rates. So if the 10-year Treasury is, let's just say 4%, you can add 2%. That means interest rates are going to be 6% in general, okay? So 2 weeks ago, 10-year Treasury fell right below 4%, and it was about 3.99. Interest rates were about 5.99. Now, fast forward 2 weeks, we have the war that has come out, all those things. So now interest rates are about 6.25. Okay.
Yeah.
But that changes daily. So every single day, new rates come out. Rates can change 2 or 3 times throughout the day. Yep. So unless you're checking rates at the same minute, same hour, same day, same product, same program, everything, the market moves daily.
Yep.
So the reason I like to bring up that, hey, you can have any interest rate you want, is because you can. I have clients that call and they say, oh, Kim, I saw online that I can have blah, 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 4 point whatever. And you can, but when my clients send me those estimates, and it needs to be a fully detailed loan estimate.
Correct.
When I look at those, they may be getting 4%, 4.5%, but they're paying $28,000 for it. And that is not okay with me. It's not okay.
And see, that's where I want to go is people are like, all right, I can have any interest rate. I'm going to come in and I want to tell you, I want a 3% interest rate. My credit score is 750. I make $100,000 a year. And then you go, all right, great. It's going to cost you 4 points. And somebody goes, what's a point? Not what's the point?
That's a great question. So let's just say your loan amount is $500,000.
Sure.
And you're going to pay 4 points for that interest rate. That equates to $20,000. Unless you are planning to stay in that house forever and ever, amen. And chances are, even then, it's probably not worth you paying $20,000. 4 points. It's just not. And also, there are regulations in place where if it's the buyer that's paying these points,
Correct.
the states only allow so many closing costs on a loan.
Yeah.
So, if the builder is paying those closing costs, if the seller is paying those closing costs and they want to buy the rate down for $20,000, they can, but it needs to be from the seller or the builder or the listing, whoever's listing the house. But what I like to look at is home buyers. Let's be smart about how much would you have to pay to get the interest rate you're talking about. Does that make sense? Does it really save you that much money? How much does it save? How much time is it going to take you to recoup paying that $20,000 to get that lower rate that you're talking about?
So what is a point?
So a point is one, usually when I say 1 point, take 1 point to buy your rate down, that is 1% of however much you're borrowing.
Okay, so a definition of a point is 1% of whatever you're borrowing. So you're borrowing $500,000. So 1 point is $5,000.
Yes.
Typically.
Okay, so 500,000, you buy it down 1%, you take 1%, yes, $5,000.
Okay, so how do points work?
When we look at we all have the same rates, we all have the same market. So we go to the market, and let's say your client is closing. I'm just going to use March the 31st as an example.
Okay.
So client's closing, we know what their closing date is, we know their loan amount is going to be $500,000. Okay. There are about 6 or 7, 8 interest rates that we can choose from, or that buyer can choose from. And so I pull up the grid and I say, here's what the market looks like today. For example, we're closing in 15 days.
You had that grid. Did you want to show something like that?
We can try. We can try. Now, I'm not the most, we can try it. Let's see it. Let's see if we can get back there. Hang on a minute. Let me see if it will let me get back to where I can show it. Hold on just a second.
Because they'll cut all of that stuff out.
Yeah, I would love to show it. I don't know, like for me, because I just know how this works, I just show it. I just show it to every single client that I talk to, and they're like, what? What do you mean? So let me see if I can pull it up for you. Sometimes it takes a little bit. Come on. Okay, let me pull this up. Okay, I'm ready.
Okay.
All right, let's see how we can share. You have to share with me or what?
No, you shared. You said you found it.
I did find it, but that doesn't mean I can find it again. Hold on, sister. Let's see. Okay, there's that. Let's see a window. Okay, here we go. Woo! Here we go. Okay.
Hey.
So let's just pretend that. Can y'all see this? Okay.
Yep.
Okay.
Can see it perfect.
Let's just pretend that we have a client. They're buying $700,000 home. They're putting 10% down. They're closing within 30 days. I'm just using this as an example.
Sure.
So with that client, they call me and they say, we're under contract. What can we do? So I go to the market. This is what the market looks like. Okay. I'm going straight to Fannie or Freddie directly.
Yep.
Because that's what we do. We just underwrite directly to Fannie and Freddie. And what you're going to see is you have all of these rates in gray over here to the left-hand side. You see those?
Yeah.
Okay.
Yeah.
Depending on when we're closing. Is it 15 days? Is it 30? Is it 45? When are we closing? We look to see.
Yeah.
So basically, when we're looking at the market, you could have an interest rate of 4.625. You could have an interest rate of 6.5. What this grid tells me is, hey, what we're looking for in this column here is we're looking for somewhere around 100 or 99.75 to price your loan out. For example, you could go with 6.375 today.
Yeah.
Wouldn't cost you hardly any money at all. You could go with 5.5 but it might cost you $19,000.
Okay.
So I think it's super important that people know how that works because, again, when you want to, you can have any rate you want, but let's make sure that you're not paying too much for that rate. How much is that lower rate going to save you? And who's paying for that? Are you, as a buyer, paying for it? Does it make sense for how long you're going to be in the loan? I mean, in the house? But let's have the conversation about how the market works because I think that people feel like there's just one mortgage rate out there, and there's not, and it changes often.
I know that a lot of buyers, when they look and they're looking for a lender, they're looking for the cheapest rate possible. And that's typically all they're looking for. It's kind of like they're looking for a car. I want to buy a Nissan Sentra, and I'm going to go to every Nissan Sentra dealership to find the best price possible.
Right.
And that's what most people think about. In my experience, when they're looking at, I'm going to buy a house. I found the house. I got the thing.
Mm-hmm.
Now I got to figure out how can I pay for the thing.
Mm-hmm.
And so I have to go to all of these different people to find the thing. But I tell people, I said, the little list that I have of the people who work extremely hard for us, I tell them, I said, call every one of them because you want to find who fits you best. Mm-hmm. I am not everybody's cup of tea, and that's okay. There's a guy that I have worked with in my office. I can't imagine doing business with the man, but I know there are people who absolutely adore him, mm-hmm. and I know there are people who would say, I can't stand to be around that woman. Mm-hmm. Because I'm not, like I said, I'm not everybody's cup of tea. That's okay. Mm-hmm. But if you find somebody that you get along with and that they are good, but what's coming up on their interest rate is more expensive, but you can get a letter, and it's usually mostly, when I say this, I will give the caveat. It's usually mostly things like the state employees credit union, which is a completely different animal. Yes. Than a broker, mm-hmm. or a mortgage lender. And so that's why I typically tell them, I said, if you get it in writing, you might be able to show it to the person that you made a good connection with. And then by law, they can say, I can match that.
Yeah. It's one of those catch-22s. It's funny. And lenders have to be careful there too, because somebody can call and say, hey, my credit score is 800. I make $350,000 a year. So-and-so bank is giving me an interest rate of 4%.
Yeah.
Again, that's probably because they haven't seen the math on it. And so I always say, I'm an open book, just like you are.
Yeah.
And if something sounds too good to be true, it probably is. Yeah. There's something more going on. And so with our clients, I'm like, you know what, just call me. And if you have gotten some estimate that sounds amazing and I haven't offered it or we're not anywhere close, please send me that estimate because I will go to bat. I will fight for you. If there is something I'm missing, then I will go and I will talk to corporate and I will make that happen for you. What I find is when I get these estimates, there's some kind of crazy, insane cost. And that's where having somebody personal that you can talk to, you or me, is so important. So I think you have to be comfortable with who you're working with. I think that you have to understand their personality. I think you have to know that, hey, I feel really comfortable or I don't. What I say is, hey, have them call me and at least talk to me.
Yeah.
You know?
And I always tell folks, I said, the only stupid question is the one you didn't ask.
Yes. My clients probably feel like I'm their mother. I know that they probably do. They probably are like, Lord, if this woman would just leave me alone.
Me too.
I'm sure, I know. That's because you and I are a whole lot alike. But I think that comes from experience, Dee. I'm telling you, there's something about experienced real estate agents. We never call ourselves old. We're not going to call ourselves old. We're going to call ourselves experienced.
Yes.
And just like the client that we worked with this weekend, what you got done was amazing.
It's one of those things that I've had too many dads, I've had too many parents, I've had too many people come to me and go, would you live here? Would you put your mama here?
Mm-hmm.
Would you? And I'm like, I'm never gonna, when I tell you, here is how we find out about the crime rate,
Mm-hmm.
that's a hint.
Mm-hmm.
Here's where you have to go to find out about the crime rate. I had folks that came in from Brazil.
Oh.
And I told her, here's the crime rate. And she goes, that's nothing compared to Brazil. I'm like, as long as you're comfortable, we're good.
Mm-hmm.
But you have to be comfortable, because it may not be what's for me,
Mm-hmm.
but I have a different experience in life than you do.
Yeah.
And if you're comfortable, then that's all that matters.
Mm-hmm.
Your comfort level is number one. It is priority number one.
That's right.
And that's why when it comes to building a team,
Mm-hmm.
they need to know that they can talk to anyone
Mm-hmm.
and get an answer. And if you don't like the answer, ask why.
Yes. And have somebody that you could text and who's going to get back to you and say, hey, I'm concerned about this, or I'm worried about this, or can we talk about this? And somebody that's going to respond. That's big, because a lot of lenders and a lot of agents
Don't answer their phones. Yeah.
have somebody who's going to talk to you and he's going to be there to support you. Because buying a house it can be scary. And you need people there. But that's
Yeah.
a lot. That's a lot of emotion, especially if you're trying to sell a house and buy a house all at the same time. That's a lot.
Yep.
So lean on your team. Lean on your team members that do it all the time, because there's a process and there's a great way to do it when you have people on your side that can help you and that you're not afraid to ask questions.
Yeah. Kim, thank you so much. I greatly appreciate you opening the doors to the lending world, because this is the kind of thing I think everybody needs.
I love you. I hope it's helpful. And if you have questions, your clients have questions, please have them call me. I'm more than happy. I can be an answer tree for anything that you need. And if I have to say no, I can say no, but at least I can tell you why, and we can work towards getting you there. So.
And we've got all your socials. We'll put all your socials up and all of your contact information in case anybody wants to contact you.
Okay. Thank you so much for having me. I appreciate you.
Thank you.
Bye-bye.
All right. Thanks for joining me on Make Yourself at Home. I hope you found insights and inspiration to help you navigate your real estate journey with confidence. Don't forget to follow, subscribe, and share this show with your friends, because everyone deserves to feel at home. Until next time, stay informed, stay empowered, and keep making moves that matter.